brace yourselves because this is the more difficult of the two, or of the three, excuse me, whoops. This is your statement of changes in owner's equity. In this particular statement, we're going to demonstrate to the person who's looking at it how our owner's equity has changed. We're going to go from our beginning capital at the beginning of the accounting cycle, which if this was a month, and we ended on October 3rd, it means the beginning capital started on October 1st. We're going to see what happened to it throughout the month, and then we're going to end with our ending capital on October 30th. The problem is a lot of different things could happen, and that is going to determine which lines you're going to use down here. You cannot just simply go to this illustration and make all of your statement of changes in owner's equity statements look like this. It's going to change based on whether or not the owner made some investments, withdrawals, if there was revenue, or excuse me, if there was a net income or a net loss. So let's take a look here and see if we've got, we first need to know the owner's beginning balance, and I'm going to come back to this later, but there are two ways to determine the owner's capital account balance. The first way is to just simply look at the ledger. If you have the ledger available to you, you just go back to the capital account and you find out what the balance was at the beginning. If they just started the business, the balance is 0. If it's the second or third or 12th time that they've gone through the accounting cycle, more than likely they'll have a line in there called balance, and it will tell you how much they have, what they started the month with. The other way, and you're probably going to have to use this chapter because you won't have access to the general ledger, is to subtract any additional investments from the balance shown on the worksheet. So the balance on the worksheet is actually a combination of your beginning balance and any investments that were made. In the assignments that you're going to be doing in chapters 9 and 10, you're going to be told whether or not there were any additional investments. If there were, we're just simply going to subtract it from the balance you see on the worksheet. Here's an example of a statement of changes in owner's equity. Notice that we have our beginning capital, then we have a section here where we deal with additions to the capital. We prepare a subtotal after our additions, and then we have a section here that deals with decreases to our capital, and then we find out our ending capital. I think the best way to do this is to not worry about this form yet, and rather focus our attention on what lines you're going to need and where you might eventually put the numbers. We won't even deal with numbers, we're just going to figure out which column we're going to put them in. So I'm going to ask you to get a piece of scratch paper, maybe a couple of pieces of scratch paper, and 3 different colored markers. Your instructor should have them available. If not, ask him or her to get them from my office. Okay, over the years, I have determined that this is probably the most effective way for students to understand how to set up their statement of changes in owner's equity. What we're first going to do is we're going to create a little diagram here, color-coded diagram, that will tell you all the possible lines that you could have on your statement of changes in owner's equity. I'm going to start with, I'll start with a blue marker here. I'm going to start with 3 lines that you absolutely have to have every time. The first one is your beginning capital line. Comma, followed by the date of the beginning capital. Come down a little ways. The second line that you absolutely have to have is your subtotal line. And the third line that you absolutely have to have is at the very end, your ending capital. Followed by the date that your accounting cycle ends. Now choose a different color. Your colors may not match mine, and that's okay. In this top section, we're going to deal with things that you might add to your capital. If you recall, investments would be added to capital and revenue would be added to capital. However, we're not going to list revenue. What do we get when revenue is greater than expenses? You get net income. So if we had revenue that was greater than expenses, the net income would make our capital go up. So there's three possible lines that could show up in this section right here. First of all, you have to put the word add. And the first one is investments by owner. The second thing that could increase your capital is net income. Now, there are times when owners won't invest anything because the company is doing well and they don't need to invest anything. There are times when the company is going to lose money and they're going to have a net loss and they won't have a net income. So it's a possibility you won't use one or both of these in a particular accounting cycle, and that's okay. But if you do use both of them, you're going to have to use this line. Total increases, or total increase to capital. Now pick another color. I'm going to use red. There are also two things that could happen to capital that would make the total go down. The first would be a withdrawal if the owner withdrew money from the business, and the second would be if they had to pay expenses. We're not going to list revenue expenses, but rather what happens if our expenses are bigger than our revenue. If our expenses are bigger than our revenue, we have a net loss. So down in the subtotal, or following the subtotal, we're going to start with less. So these are the things we would add. I don't know why we don't use the word subtract, but you use the word less. Withdrawals by owner. The second thing that could make your capital go down is a net loss. Same as up here, you may not always have a withdrawal by the owner, and there may be times where it's a net income and you won't have a net loss. But if both of them happen, you're going to need total decrease. To capital. Whoops, can't spell. Okay, I highly recommend that you keep this handy. We're going to use it right now. I would get out a pencil maybe, and I'm going to give you some scenarios, and we're going to decide which of these lines you would have to use on your statement of changes in owner's equity. My first scenario up here might be difficult to see. Maybe I'll zoom in a little bit and then we'll have to zoom out it later. Don't worry so much about this general ledger balance capital at first. We'll come back to this scenario later and work with those numbers. But given the fact that we had revenue of $13,000, total revenue of $13,254, total expenses of $10,035, withdrawals of $1,500, and an investment amount of $2,450. We're going to use those values to determine which of those lines we need to include on our statement of changes in owner's equity. So the first thing I'm going to do is this. We're going to go through each of these lines. Do we need beginning capital? Whoops, back up again. Woo. Do we need beginning capital? Yes. We always need beginning capital. You might want to put a check mark there. Will we need add investments by owner? If I look over here, were there investments by the owner? Yes. So we will need investments by owner. Do you need net income? Was our revenue higher than our expenses? Yes. So we will need net income. If I have both investments and net income, do I need the total increase to capital? Yes. Will I need subtotal? Yes, because I always need subtotal. Remember, those three are the three that I always need. Now let's take a look at the less. If I look at my scenario, did the owner withdraw anything? Yes, they withdrew $1,500, so I'm going to use that line. Was there a net loss? Well, remember, our revenue was bigger than our expenses, so there was no net loss. That means we will not be using net loss. If we only have withdrawals and not net loss, do I need total decrease to capital? No. Do I need ending capital and the date? Yes. So in this case, I would only be writing these 7 lines, and I would leave these 2 lines off. Once you erase your check marks, I'm going to give you another scenario, and I'm going to have you try to figure out which check marks or which lines should be included. Here's our second scenario. I'll have you just start by looking at this. I'll zoom in so you can see it. Put check marks by the lines that you think would be appropriate. Give you just a few seconds here. Okay, if you're not done, go ahead and stop the video until you are. But let's move forward here. How many of you thought we needed beginning capital? Yep. Do we need investments by owner? Yes. Do we need net income? No, because our expenses were bigger than our revenue. If I only have investments by owner, do I need total decrease to capital? No. How about subtotal? Yep. Less withdrawals by owner? No, there were no withdrawals by owner, so we're not going to use that one. How about net loss? Yes, we're going to use net loss. Now in this case, since I'm not using withdrawals by owner, I can actually just move net loss up to the line with less. So it'd be less : net loss. If I only have a net loss, do I need total decrease to capital? Nope. And we always use ending capital. So in this case, I would only have 1, 2, 3, 4, 5 lines. All right, one last scenario. I want you to erase your check marks or put them off to the side. And our last scenario, let me switch the page here. I'll zoom in so you can see it. Whoops. We have 10,000 in revenue, 8,500 in expenses, withdrawals of 500, owner investment of 0. Check the lines that you think you would use in your statement of changes in owner's equity. Okay, if you need more time to process, just momentarily stop the video and then return. Do we need beginning capital? Yes. Was there an investment by the owner? No. Did we have a net income? Yes. And like the other one, since we don't have investment by owner, you would have the word add, : and then put net income right up there. Do I need total increase to capital? No, because there's only one. How about subtotal? Yes, we always use subtotal. How about less withdrawals by owner? Yes. How about net loss? Nope, we had a net income, so we don't have a net loss. If that's the case, do we need total decrease to capital? Nope. How about ending capital? Yep, we always do. So in this case, 1, 2, 3, 4, 5 again. That's all we needed. So now we're going to take these same scenarios and we're going to put them on some paper. We're going to actually write the lines that we need. So instead of just check marking them, we're actually going to write the lines that we need. And we're going to decide which side or which column we're going to put the numbers in. So on another scrap piece of paper, I would hang on to this, use this as your guide. And let's go back to scenario number 1. Okay, here's what I would suggest. You look at these numbers, you compare it to this list, and then we're going to write down just the lines that we need. Don't worry about where the numbers go, just write the lines that you need. So I know I'm always going to need a beginning capital. So write beginning capital. And then you don't always have to underline it. I'm just putting it there because you need to fill it in. The second line is add investments by owner. Do we have that? Yep, we do. So we're going to write add investments by owner. The third line is net income. Did we have a net income? Yep, we had a net income of a little over $3,000 or maybe a little less than $3,000. So I'm going to add net income. Since I needed both of them, I'm going to have to write total increase to capital. The next line is one that we have to have on all of them. That's subtotal. Now we're going to worry about less things that we're going to subtract. Did we have any withdrawals? Yep, we had 1,500. So we will say less withdrawals by owner. Did I have a net loss? Nope, I made more money, so I'm not going to have the net loss. Then do I need the total decrease to capital? Nope. Therefore, I'm going to end with ending capital. I put the last day of my accounting cycle. Now, on your form, you're going to have two columns, a left and a right. We're not going to call them debit and credit. We're going to call them left and right. Because it depends on if we're bringing totals over or if we're listing individual amounts that will eventually be totaled. So in this case, we have to find our beginning capital. With this scenario, notice that it says the general ledger balance, and this would be found on your worksheet, the general ledger balance for capital at the end of the cycle was $28,600. And our investments were $2,450. So this amount right here is split between your investment of $2,450 and your beginning balance. You have to subtract your $2,450 from this in order to get the beginning balance. So I'll take $28,600 minus $2,450. Oh, manual here. So we're left with a beginning balance of $26,150. Whoops, can't really see it over there, can you? All right, since that is a total beginning capital, we're going to bring it all the way over to the right, and we're going to write $26,150. The investments by owner and the net income have to be added together to get a total. So we're going to list those individually in the left column. Your investment was $24,500. So we're going to write $2,450. I'll have a little mind fart there. And our net income is the difference between our revenue and our expenses. You could have also gotten that from your income statement, which you've already calculated all of this, but since we haven't, let's go ahead and subtract it. We got a net income of $2,919. Remember, I put it on the left because I'm going to be adding it to something. Whoops. I messed that one up. It's up here on net income, $2,919. You then are going to draw a single rule because these two have to be added. And when I add them together, the total is going to actually go over here to the right-hand column. So my total, if I add it up here, you can get your calculators out if you want. We had total increase of $5,369. Now we're going to be calculating our subtotal. We're going to take our beginning capital and add our total increases to get our subtotal, which in this case would be 9, 11, $31,519. I really hope my addition's right. The next thing that we're going to do is list our withdrawals by owner. The withdrawals by owner was $1,500. It is the only thing that we are subtracting, so I'm not going to add it to anything else. Therefore, it is my total. I'm going to bring it straight across. And I'm going to draw a single rule because I'm ready to total my ending capital. Because it's a less, I'm going to subtract it from my subtotal. My ending capital is $30,019. Now that, we can't really compare it to anything. We compared our net income and our net loss to the worksheet. We don't have this anywhere. We will determine if this is correct once we put it into our balance sheet. But at this point, we don't really know. That double rule doesn't mean it balances somewhere. It just means that we're done. Single rule means we need to calculate something. Double rule means we're done and we're not going to add anything else to that report. Let's do one more scenario. Let's take scenario number 2. I'm going to give you some time to write out what you think it should be. I'm going to actually stop the video. I want you to try this scenario. Let's see here. I made a mess of everything. I'll zoom in a little bit. Stop the video and come back and I'll show you the results when you're done. Time to check your work. Here's scenario number 2. Now I've got it set up here kind of like a statement of changes in owner's equity. You would have your 3-line heading where you would put who the company is. You'd write statement of changes in owner's equity, and then you'd write for the month, year, period, quarter, ended, and then the last day. In this particular one, we had a beginning capital of $14,250 because we started with $15,250 and we subtracted the investment by the owner of $1,000, leaving us with $14,250. The next part is adding investments by owner. That was the only thing that was going to be added, so we're going to send it directly across to the right-hand column. So it's adding 1,000. We're going to do a single rule, find our subtotal by adding those two. Now I know some of you are saying, but that's what we started out with in the worksheet. Why couldn't we have just left it that way? The reason we actually pull the investments out and then put it back in is we want who's ever reading this report to know that this number was not generated from business activity, but rather a portion of it was generated because the owner invested some more money. So this is a way to communicate to those individuals that don't have a working knowledge of what's going on in the business, that not all of this money is a reflection of how well the business is doing. Part of it is a reflection of how much the owner is giving. The next line that you were to use was net loss. There was no withdrawals. So notice how I have less, colon, net loss. And I brought the total amount straight across because I didn't have to add it to anything else first. I'm going to do a single rule. I'm going to be subtracting it. So 15,250 minus 130, you're left with 15,120. Double rule because you're done. We're not going to do the third scenario. Rather, we're going to turn to our books and complete problem 9.5. So stop the video and get prepared. Hopefully you have your textbook and your workbook. Turn to problem 9.5. I'm going to read the directions out of the book here. There's something significant that we need to make note of. It says, using the worksheet for Wilderness Rentals, that's the one that we just used, or we used for the income statement, in your working papers, and the income statement prepared in 9.4, which is the one that we prepared earlier, prepare a statement of changes in owner's equity and a balance sheet. Well, we're going to focus our attention on the statement of changes in owner's equity, and in our next video, we'll worry about the balance sheet. Make note of this. Ronald Hicks made an additional investment in the business of $500 during the period. Now, if I didn't have instructions and I was just using my accounting records, I could actually go back to the general ledger and see that he made that additional investment of $500. Because they don't want to give you an entire general ledger for some of these assignments, they actually tell you that there was an additional investment of $500. If they don't make any mention of it in the instructions, it means that they didn't make an investment. Look down here at problem 9.6, which you'll be doing later. Instruction number 3, it says prepare a statement of changes in owner's equity. Regina Delgado made no additional investments during the period. So in this case, you don't have to subtract anything from your worksheet total. All right, so let's take a look at our worksheet. It's found on page 165 of your workbook. We're going to be using some of the values from here. Actually, about the only thing. Nope, I take it back. We're going to be using the capital. We're going to be using withdrawals. And we'll get our net income or net loss from up here on our income statement. And we'll get our investments from the instructions. So the first thing we're going to do is start that 3-line heading. It's going to be very similar to your worksheet, except it's going to say statement of changes in owner's equity. All right, Wilderness Rentals. And we'll write statement of changes in owner's equity, please. You can abbreviate a little bit. You could maybe abbreviate statement to 4 letters and changes to maybe CHGS, but please don't bring it down. Don't abbreviate it to SCOE. Somebody who's not familiar with accounting records, it's not going to mean anything to them. This might tell us a little bit, it might give them a clue that, oh, we're looking at some changes in the owner's equity or their claim to the assets. The last thing is going to be the same date that we've used before. For the month ended September 30th of the current year. All right, given our scenario, we have to decide which of these lines, of course I lost my sheet, so, you know, bear with me here. we have to decide which of these lines we're going to be using. I'm going to actually erase these check marks from before, and let's just think through this before we write anything down. First of all, do you need a beginning capital? Yep. Do we need an add investments by owner? Yes, in the instructions it said they invested $500. Do we need net income? Let's go to our income statement. Why, yes, we had a net income. If I have those two, then I'm going to need my total increase to capital. We always have a subtotal. And now let's take a look. Were there withdrawals by owner? Well, we can determine that by going to our worksheet. Ronald Hicks withdrew $700. So yep, we're going to need that one. Do we need a net loss? Nope, there was a net loss, or there was a net income, so there's not a net loss. If I only have one, do I need the total decrease to capital? Nope. But I do need ending capital. So now let's just take a few minutes and we're going to write these lines on our accounting form. I'll do it quietly while you follow along. Notice that I'm going to actually say, since it's for the month ended September 1st, I'm going to put September 1st. If you don't have all the lines written, just momentarily stop the video until you're done. Now we're going to start filling in the numbers. How are we going to get our beginning capital? Well, we're going to go over here to Ronald Hicks Capital, and remember this is a reflection of the beginning capital and any investments. Well, he made an investment of $500. That's what our instructions said. So I'm going to take my $13,260 and I'm going to subtract $500 from that. That will give me, I hope I have the right amount here, 12,000, let me just write it out. Bear with me. I don't have a calculator handy. $12,760 as my beginning capital. According to the instructions, there was an added investment of $500. And our net income from our income statement was $1,812. Because those two don't represent the totals individually, they have to be added together. We're going to draw a single rule, and they were listed on the left-hand side. And we're going to calculate our subtotal, or excuse me, our total increase to capital, which totaled out to be $2,312. Because that's our total increase, we bring it all the way over here to the right-hand side. Now we're ready to add these two together to get our subtotal. Give me a second, get your calculator out, make it happen. Should end up with 15,000 72. Boy, I hope my mental math is right. All right, now we have less withdrawals by owner. They withdrew 700. Now notice, it's a debit, but it's also my total. It's the only thing I'm using. So I'm not going to put it over here just because it's a debit. Rather, I'm going to put it all the way over here because it's my total of $700. And the last thing I'm going to do is draw a single rule because I'm ready to calculate those two. And I'm going to subtract 700 from my subtotal. Get your calculators out and make it happen. Hopefully you got 14,372. End with a double rule, and we're ready to move on to the balance sheet. Before I do that, I want to just emphasize again where we have single rules. We have one there, one there, one there, and two there. If I had to double up on my lesses, I'd have another one over here. I guarantee this will frustrate some of you, but just take a deep breath and come back to the video, hash it out with your table mates, look back at examples, make reference to this. You will get it. It'll just take some time.